Hi everyone, it's Jack Bowen in the video, and today I'm going to be talking about ARM, one of the newest stocks onto the stock market, or the newest relatively big IPO in a long time. IPO price of $51, up as much as 25% on day one, now down to around $60, still decently above its IPO price, but of course that isn't really open to regular average Joe investors like me and you. So for a market cap of $62 billion at that price, that gives it a massive P of nearly 100. So I want to establish whether this price can be justified for the average investor, whether this is an investable company at these sort of prices, or if it's a wait and see, or if it's just totally not investment whatsoever. So let's get into it. ARM is a semiconductor and software design company that's mostly famous for the ARM CPU architecture. This is a duopoly really in the CPU market. The architectures are either x86 or ARM, and they're pretty much the only two names in the game. Now for computers, desktops and things like that, x86 is dominant. However, ARM is taking some market share, and we'll talk about that a bit more in a minute. But for smartphones and small devices, ARM has an absolutely dominant position. That's why they market themselves as having the world's most pervasive CPU architecture, over 250 billion ARM-based chips since inception, 15 million software developers on ARM, 30.6 billion ARM-based chips reported as shipped in just 2023. They believe they're a foundation of the semiconductor business. They do products, work with foundries, do chip design, and the ARM CPU they consider the brain of everything. The key advantage over x86 is that it consumes less power with reasonable performance, and this is much more desirable in smartphones, which is why it has an pretty much monopoly on this market in terms of companies using their architecture for designs, and they get healthy royalties from this. Prior to its IPO, the last time most people will have heard of this business is when Nvidia's takeover collapsed. So in 2020, they had a $40 billion takeover bid accepted, but unfortunately the bid collapsed due to regulatory hurdles that they considered insurmountable, and Nvidia had to pay ARM not inconsiderable fees in the region of a couple of $1 billion. And this is very interesting to me. So Nvidia had a bid accepted for $40 billion. ARM sales have not increased so rapidly since then, and inflation, and particularly with valuations coming down significantly from September 2020, and currently this business is worth $62 billion. I don't think so based on this, and I'll talk a bit more about why I don't think so. But to be 50% higher valuation than you were in September 2020, when valuations were almost at the peak for these type of businesses, not quite at the peak I guess, because you had 2021 was really the peak, but even still you would expect most tech-like companies, fast growth tech companies, their September 2020 valuations are significantly higher than they are now. Speaking of those royalties, you can see how this has grew dramatically over time. So they're typically able to command royalties from chips that contain their products, and this creates long-term recurring revenue for each design win essentially. These are becoming in more and more products. For example, they're in many smartphones, almost all smartphones. The next generation Apple Macs with the M chips, they are ARM-based architecture, so many notebooks, they're grabbing a lot of market share in the notebook market. They haven't had basically any success with Windows products, but they have a long-term strategy for that. I think what is perhaps most interesting is they see sustained revenue streams from older chips. So 46% of the business's royalty revenue as the end of the financial year in 2023, which ended in March for them, was from products released between 1990 to 2012. So this is very Texas Instruments like, and they make a lot of products and they gain considerable royalty revenue for old chips. Now this is really desirable because they never really go out of fashion. For many chips, they'll be used for a couple of years, then they're gone, never to be seen again, never to be seen any revenue from them again, whereas that is absolutely not the case from ARM. And you can see equally the value they're getting from the 2019 to 2023 numbers are surpassed by the 2014 to 2018, 2009 to 2013 numbers. So it's really impressive that they can generate this consistent recurring revenue with some peaks and troughs. You can see the 1990 to 2008 numbers, there's some peaks and troughs, but it's still producing consistent revenue in that $200 million range for products that were made 20 years ago. Really impressive. This is all a bit wordy, so I don't expect you to read this. The key thing is their total addressable market is absolutely massive. They predict that the total addressable market was approximately $200 billion at the end of 2022. They think this will grow at a compound annual growth rate of 6.8% to approximately $246 billion by the end of 2025. They predict that the aggregate value of chips containing ARM technology was around $98.9 billion at the end of 2022, representing an approximate 48.9% market share compared to 42.3% that it was just 2 years earlier. This is a company that has grown rapidly in the last few years, not absolutely staggering growth by any means, and we'll talk about that more in a minute, but it grew consistently and it has huge optionality. They have mobile applications processors, other mobile chips, they have consumer electronics, they're trying to get into data centers, they have personal computers, mostly notebooks, basically anything that uses a reasonably high performance chip, well, especially if they need low power capability, then ARM absolutely has a place and is trying to get into those markets. One of the key growth drivers for this business is predicted to be ARM-based PCs, with market share expected to double by 2027. ARM-based notebooks, which is essentially the M-series Mac laptops, among others, will gain share over Intel and AMD, or is predicted, and that's expected to double the shipment share to 25% from around 14% today. These high-performance CPUs cores and integrated memory using ARM-based system on a chips are looking at rivaling the x86 CPUs, and with advanced AI and GPUs, they believe this will cause significant market share growth for this business going forward. The ARM-based hardware to run Mac OS has allowed Apple to capture 90% of the ARM-based notebook computer market, so a little bit of support or even full support from Windows and Office 365 could really help this business grow its market share significantly in the next few years. Unfortunately, particularly in the last year, so the growth from 2021 to 2022 was reasonably impressive. They added 700 million onto the total revenue for a total revenue of 2.7 billion for the full year. Unfortunately, this year they actually lost revenue only minutely, is basically flat down 1%. This is extremely unimpressive in my opinion for a business that is commanding a PE of close to 100 at its IPO, and for me this is really all I need to see. It is an extremely overvalued business right now. Even with its prospects going forward, I just cannot get really behind a business that has flat growth, even with pretty strong margins and profitability and a non-GAAP free cash flow, 606 million. Even still, it's trading for nearly 100 times free cash flow. This is just not a business that I'd be willing to invest in right now. I think it's significantly overvalued. That's not to say there are no pros to this business and that there isn't a possible investment case here. I simply think the valuation is just a little too high. So here are my key takeaways from this. Pros: obvious long-term tailwinds in the semiconductor market. Looking at a compound annual growth rate of 7% at least until 2025. Well, that's what they believe. High optionality. Lots of places they can force growth. PC market share is predicted to double by 2027. They're looking at getting in data centers where they have a relatively low market share. A lot of markets to hit. They have a dominant position in smartphones, which is not looking like changing anytime soon, and they have reasonable margins. That royalty model gives them excellent margins. The cons, the one that I really can't get over is it's trading at almost 100 times earnings, and I can't really see why, considering it has no growth. That's not to say it has no potential for growth, as I mentioned, but right now it's got no growth. I'm not willing to pay that price. A further con, 90% is still owned by SoftBank. At the current prices, I can see them disposing of this, well, not all of it, but certainly some of it in the not too distant future. That's going to hit the stock price over time. As I mentioned, negative growth in fiscal year 2023. The US-China political risk is actually significant for this business, in my opinion. Like the likes of ASML and Applied Materials and stuff like that, there is potential for the US or China to try and seek bans on exports either way. 2/3 of the sale come from just these two countries. That is potentially worrying. I can't really see it going forward because politically just hitting the smartphone market as hard as that would, I just can't see them really going for that. However, it is certainly a non-zero risk. And also there's potential for customers to try and design them in-house. I mean, right now they're quite happy to pay royalty fees to ARM, but it's not unheard of. So some of the customers are some of the most well-capitalized businesses in the world, for example, Apple, Amazon, etc. It's not unthinkable that they would try and build their own chips in-house, as they've done for many, many other things, and circumvent the paying the royalty fees to ARM by using their own architecture. I don't think it's likely, and I think ARM is relatively well insulated from this, but it's absolutely not impossible. That's really all that needs to be said for me. I think the initial IPO price was very, very high, and I can't really see a world where I'd be willing to pay anything over right now, over like $30 or $40 for this business. At the current PE, 100 PE is just absolutely outrageous for this business. Of course, that's just my opinion. You let me know what you think in the comments down below. I'm not a financial advisor, so none of this is financial advice. You should do your own due diligence, form your own opinions, and of course remember that your capital is always at risk when investing in any stock. Let me know in the comments down below, like and subscribe and enjoy the video. I'll see you next time.